Hi guys, how are you doing? I want to show you a very special case of ICT Silver Bullet and talk about it with you for a moment. So today is the 13th of March 2024. I was just observing the price movements between 3 a.m. and 4 a.m. New York local time, which is morning for me here in Switzerland. So I want to show you this. Today is the 13th, Wednesday, and we have news at 1 p.m., which means that, and by the way, we have red news, which means that we can absolutely trade the two morning sessions of the silver bullet strategy with ICT. Now, if we go back to the price movement of today's silver bullet session, we can see that if we discard this part here and we just look from midnight of the 13th of March, until 2:55, 3 a.m. New York local time, so this area here, we can see that the price is retracing back into the fair value gap. Here we have a level of buy side liquidity from the previous day. Here we have the level of buy side liquidity from today. And here we have our sell side liquidity level. So what does the price do? The price takes out, with this movement, the first level of buy side liquidity and then the second level of buy side liquidity, which is the buy side liquidity from the previous day, so a high from the previous day. It goes even higher, and so that is very good actually. This is a type of movement that we like to see. Why we like to see it? And we like to see it forming right before or at the time of the silver bullet time. Why? Because our strategy, let me just take it back, says that we should go find the daily bias, look at the right time of the day, observe the chart, find the liquidity levels on the 1 hour and on the 15 minutes time frame, and then we are waiting for point number 6, which is the price at the right time to take out a previous liquidity level. And so the price here did exactly that, took out this buy side liquidity and this buy side liquidity level. He also respected on the 5 minutes time frame, but also on the 15 minutes time frame, which I want to show you here, this fair value gap, which is a fair value gap on the 1 hour time frame that we have signed up here that got formed on the previous day. I can show it to you very quickly. This is this fair value gap from Tuesday that got formed here with this candle. These were news. This was, if I'm not wrong, CPI, core CPI month over month at 8:30 a.m. in the morning. And this is exactly it, 8:30 a.m. in the morning. There is this like huge candle, huge volatility. Look at this week, forming this buy side liquidity level. And then the price went lower, formed the fair value gap, retraced back into the fair value gap. And this is where we are still today. So inside this fair value gap area. Let me make our price movements a little bit bigger. Okay, so that we can observe them better. Now, if I go on the 5 minutes time frame, why am I going on the 5 minutes time frame? Well, because the price took out these liquidity levels, and by taking out these liquidity levels, then if not before even, it's my moment to go on a lower time frame, such as the 5 minutes time frame. Okay, this happens, and then what I want to see happening is the price reversing. So we go on the 5 minutes time frame, then we want to see the price reversing. So we're waiting for the price to reverse. So if it took a high, which it did because it took out a buy side liquidity level, we are waiting for the price to go lower, which the price did. The price started going lower. Let me sign it here for you. And the price started going lower with this movement. Inside this movement, which we, by the way, looking at it from here, let me make it a little bit bigger and let's focus on this here. So the price starts going lower. What do we want to see when the price starts going lower? I'm going to go here also to the 3 minutes time frame. Well, we want to see the price taking out a previous level in that same movement. So in this movement of the price, we want the price to take out a previous level. In this case, a previous low, which we have here. We have here a low. This candle, you see, higher, this higher, so this is the low. that we want to see the price taking out. And the price does that in this movement, which is perfect. So for us, this is then a check. Then we want to see point number 10. We're looking for the price to create a fair value gap. And guys, plenty of fair value gaps. We have one here. We have another one here. So we have a couple of fair value gaps here. Forgive me, everything is blue on blue. I'm gonna make it maybe yellow so that you can see it a little bit better. So these are the fair value gaps on the 3 minutes time frame, which is perfect. Awesome. All happening inside this big movement, this big fair value gap on the 1 hour time frame. Amazing. I'm really happy to see this happening. It's perfect. And we say to ourselves, wow, okay, check, check, right? In that same movement, we see the price forming this fair value gap. And in that same movement, we want to see a big displacement. Well, guys, we do have a big displacement here. We do have here a big price movement. Price took out this low, formed fair value gaps, went even lower with one only movement. And then it would be our point number 12, which is, now that the price has created a fair value gap, stop and check. Is it according to our bias? What are the reasons why the price would want to go in an opposite direction? So if you stop here and you observe, do you see a reason why the price would actually want to go into the opposite direction? And so instead of keep going lower, why the price would want to reverse and keep going higher? Well, guys, the reason is here. The price in this movement took out the sell side liquidity. The price took out sell side liquidity, so it was charged here with extra liquidity, went lower very fast. We see here two candles of 3 minutes, and then the third one that we're really pushing it. But then the price took out sell side liquidity. And when the price took out this level of sell side liquidity, it recharged again. And by recharging again, it went higher without respecting this fair value gap, without respecting this fair value gap either. Took out this previous high, which you can see here, and touched the 1.0932 level. So here. That's a good reason to not enter any trade during this silver bullet time, because the price, after taking buy side, completely reversed, show us what we wanted to see, but then it took out sell side liquidity. And so that alone tells us that we cannot trust this price movement in this case. And it's better to preserve our capital and not to be trading. In an ideal world, what we would have want the price to be doing after this low movement, maybe the price would not take out sell side liquidity. So let's imagine the price did not take out sell side liquidity. We would want the price to go higher, trace back into the fair value gap, either this one or this one. And when you have a doubt on this, where the price should be going on the 5 minutes, on the 3 minutes time frame, what you can do is go on a higher time frame and check it out for there. Here, the fair value gap looks actually more something like this here, if I can see correctly. There are now many charts, many fair value gaps. Sorry guys for that. I just want to show it to you quickly. So this would be the fair value gap that then we want to be considering, okay? So in this, and I'm going to take it away now because I know it's too many, but just consider this. If we are asking ourselves, okay, where is the price going to retrace back to? Look at the middle of this fair value gap. Here is a good level. If you're lucky, the price could be entering back again into this fair value gap on the 3 minutes time frame and stay within this area more or less. If it goes slightly above it, that can be still okay, but it should not completely break it out with a new candle, so with the body of a new candle on the 5 minutes time frame. So going back on our 3 minutes, we would want the price to be doing this. So forming a new low, going lower, retracing back potentially until here maximum. And I'm gonna sign this with red so that you can see what we are looking for. When the price does this, we want to be entering a short position trade. And I'm signing it here. If the price arrives here, that's also totally fine, guys. No problem at all. It's just to like make things easy for us. Where do I place my stop loss? Well, it's correct to place the stop loss slightly above the fair value gap. So here would be a good level to place your stop loss. Where do you place your take profit? You're going to place your take profit on the previous low. And if the previous low was here, we would have placed it here. If the previous low is here, we would have placed it here. So to the previous level of liquidity. Without making things complicated or anything, this would have been a 2.1 trade if the price did not take this liquidity level, okay, this sell-side liquidity. So these are the things that we want to see. And then after, we potentially want to see the price going lower and taking our take profit. So these are the movements that we would like to see when we are trading. Clearly, this doesn't happen here because the price, by going lower, takes out this level of sell-side liquidity. And it tells us implicitly that we cannot trust this price movement right now. Remember, guys, point number 12 is so important. Finding any reason, and I mean any reason, why we cannot trust the price movements in that case. For example, here was the sell side liquidity that got taken over by the price movement going lower. You can see here that right now the price is still inside that fair value gap, slightly touched outside of it, and then like it's still there. So I'm gonna take out everything. I'm sorry I draw so many things, but I hope you followed the reasoning. So guys, this would be a reason why to not enter these fair value gaps, because the price took out the sell side liquidity. I hope this helps you, and I'm gonna see you here super soon. Keep it up, guys.